Day trading can be simplified, especially if you know what you're doing. So pay attention. This is all you need in order for you to succeed as a day trader. Every single day, there's always a trade. There's actually multiple trades that you can execute with this strategy. So pay attention, okay? The first things first, you're going to need the DTT kill zones indicator. You can find that on doubletoptrading.com website. Go there, download the tool, and you'll be able to use this. Now, that being said, look at what's happening here. There's a New York session high, which is the top of this orangey looking color, or peach or whatever, and then the bottom, which is the New York session low. Now, you don't see that ugly color until the session is completely concluded. But what you do see is this box. So this box is the opening range breakout box. It's a very special box. It's going to allow you to understand what the market is doing and when it's doing it. And what I mean by that is very simple. So we'll take this as an example. This morning, the price started to come all the way down below the box, right? And then it came back up into the box. So it faked out some people, and then it came back out into the box right here. And let me just draw a circle here so you see what I'm talking about. So here, it had a rejection. The moment it had a rejection and it left the box again, that is your cue to enter the trade. So you can enter the trade and you can put a stop loss right above this little line right here. Or if you want, you can put it at half of the box, but it all depends on how much you're risking. So risk management is very important. I'm not going to go over that in this video, but check this out. If you would have taken this trade right here and we measure it all the way down to the bottom of the box, which is the low, that is 603 ticks. 603 ticks, meaning if you were trading one MNQ contract, you would have had approximately $300. Two MNQ contracts, you would have had $603. Now let that sink in. All you need was two MNQ contracts, and you would have made $603, okay? Now your risk would have been different, right? So if you would have had a risk up here at this little thing right here, this little line, it would have been 142 ticks of risk, I'm sorry. That being said, 142 ticks of risk is $142 if you were doing two MNQ contracts. So you're risking $142 to make $603. That right there is what you need to know. Why? This happens every single session. Every single session, when the session opens up, you are always going to have a move available. Now, whether it's a good move or a bad move, we don't know. We have to analyze and understand what the market's doing, whether it's rejecting off of something, or if it's not rejecting off of something. That's completely up to you. Now, here's another thing. You do not need to capture the entire move. You can only capture, you're not going to be able to capture the entire move. So I'm not going to say, hey, you're going to get directly from the top all the way to the bottom, because that's just not realistic. But even if you got a piece of that move, you would have made a good income. Okay. So now the key for you to remain profitable is very simple. You need to do math, or you need to use one of the double top trading tools. It's called the risk manager. So I'm going to pull up the risk manager so you can see what it is. So this risk manager is this tool that you see on the sidebar right here. Now, you're allowed to set the buffer that your account has, how much ratio you want to risk. So let's say I want to do a 1-to-2, right? And then how much my stop loss should be. So if I want my stop loss to be 50 ticks, or in this case, 142 ticks. So let's pull it all the way up to 142 ticks, right? Boom. Now it's at 142 ticks. I want to do one trade, and I want to have a fallback period of 7 days. What that means is I have one trade that I can take, and if I blow it, it's okay. I have 7 days of buffer, I guess, to deal with it. So this basically just calculates my risk settings on the fly. All I have to do is press the calculate button. Boom. Now that I press the calculate button, it tells me how much I can risk with a $2,000 buffer on my account. I am able to risk 4 micros. Now, if you remember what we were talking about earlier, this was 603 ticks, okay? So that would have been for 2 micros, $603. If you would have done 4 micros, the way the calculator tells you to do, then in this particular case, you would have been up over $1,000. This is something that you need to learn, and all these tools you can find on doubletoptrading.com. So I strongly suggest that you go on the website, doubletoptrading.com, get those tools, and make sure that you use this to your advantage. Good luck, and if you have any questions, write them in the comments below. Happy to answer, happy to help. See you guys soon.